Africa Business News, proudly sponsored by EY.
Coming up on Africa Business News, Kenya's cement and steel manufacturers cut retail prices. Expectations run high for the South African finance minister's impending budget speech. And Ecowas plans to inject $21 billion into West Africa. Stay tuned.
Africa, it is huge, it is diverse, and its business landscape always fascinating and dynamic. And that's our business here on your favorite weekly African business stop. In Nairobi, Bonitunya brings us the latest from East Africa. Christy Cole Popola is in Lagos, and we will hear from Christine Mundo here in Johannesburg. My name is Victor Homoeswan, and this is the Africa Business News. Aside from petrol price being at an all-time low, Kenya's consumers will be reaping more benefits from the falling crude oil as cement and steel manufacturers also cut their retail rates. Tell me about that.
Victor, this has got to be the biggest positive news for Kenyans yet, because steel and cement manufacturers have joined food processors and long-distance buses in cutting prices as pressure mounts on other producers to transfer the benefit of the dropping energy prices to consumers. The National Cement has cut the ex-factory price of its Simba brand, for example, by 25 shillings to 575 per 50 kilogram bag. Now, steel, which as we know is critical for support structures, is priced at just about 11.2% lower, and it is currently doing 64,860, just about $710 per ton, Victor. And this piece of news is particularly interesting, seeing as the Kenyan Association of Manufacturers, the lobby body that brings together all these people, has repeatedly ruled out full-scale reduction in commodity prices, saying that to do so, the firms first need 6 months of fixed energy prices guaranteed. Now, the business lobby asked the energy regulator recently to consider reviewing energy prices only twice a year to sort of create stability in the market. So they're saying, yes, we might be celebrating, but not just yet. We need a bit more time. And most cement farms, Victor, in the country rely on electricity to fire their plants, but several have indicated plans for a switch over to coal-fired plants, citing high energy bills. So quite interesting and good news for Kenyans. We'll be looking in the coming days, because as it is now, for individual consumers, we have a drop of just about 30% in 6-month period.
And finally, Uganda is persistent about building a refinery, oil refinery, that is to process its crude. Why turn to the Russians, though, to build this $4 billion project?
Question has been why the Russians, especially now, the Russians have been on the headlines for all the wrong reasons. But Victor, on February the 17th, the government of Uganda announced that the Russian firm RT Global Resources had been selected to build a refinery in western Uganda and just about 250 kilometers long pipeline to Kampala. Now, this was obviously good news, but Uganda still faces significant hurdles to its slated 2018 target for oil production, despite the selection this week of the developer, the Russian company, for its 60,000 barrels a day refinery. Now, in 2013, you might want to know that more than 60 companies responded to a government announcement seeking a potential investor to build the $2.5 billion refinery in Hoima. At that point, part of applications were the British, the UAE, Swiss, Dutch, and Vitol, as well as the Japanese, all of which were interested in this, but only 2 of these, one being the Russian firm and the other one is the South Korean consortium that led in those bids, and they were invited to participate in the final negotiations with the government that resulted into this announcement. So according to the preliminary estimates, the cost of the refinery includes the expense for construction of the 250 kilometer pipeline to Kampala, and the necessary infrastructure, and the Russians seem to have given the Ugandans quite a good deal.
Well, Russians doing business with the Ugandans in oil. The Germans are in the energy sector in neighboring Rwanda. Thank you, Bonitunya, coming to us from Nairobi in Kenya. Next up, we are joined by Christine Mundo in Southern Africa. Stay tuned. We are still on Africa Business News as we anticipate South Africa's annual budget speech this Wednesday. Christine, it was tips for Trevor previously, pointers for Praveen. What is it going to be this time? What do they call it? Notes for Nene. What are South Africans expecting from Minister Nhlanhla Nene's budget this year?
So this is a particularly interesting budget because for the first time, government may actually, since 1994, government may actually have to increase taxes to raise revenue structurally rather than the usual sin tax or other tax policy changes. And this is because in his medium-term budget speech towards the end of last year, the minister indicated that he needs an additional 12 billion rand or just over $1 billion if he is going to raise revenue without necessarily cutting government expenditure. So there has been speculation as to where he's going to get this 12 billion rand. People are looking at VAT, for example. It's more broad-based. You're likely to get more as opposed to targeting the tax base, which is...
And it's easier to collect.
Which is really small. That's the problem with the tax base. So if you look at our VAT rate here in South Africa, 14%, pretty much on par with other African countries. But if you go to other emerging countries like Brazil, where it's sitting at 18%, surely there's room to go up. But it's obviously very unpopular, VAT, because you're actually taxing the rich and the poor equally, which doesn't sit well with many people.
Well, I think the UK is at 20% the last time I checked. But the Namibia Statistics Agency releasing the reports, the sectoral reports for December, detailing the best and worst performers, who performed the best and who performed the worst, particularly the worst, because I think mining is involved there.
Yeah, mining unfortunately was the worst performing sector, down 16% month on month and down 14% year on year. So that's not good news. But interestingly enough, and I think this tells a consumer story, the beverage sector, both non-alcoholic and alcoholic, was the best performing sector there. Thank
you, Christine Mundo, for joining us. Up next, out of Lagos, Nigeria, is Christy Cole Popola to wrap up Africa Business News. The story of the week has to be the Nigerian army recapturing settlements previously taken over by Boko Haram as the army and the multinational joint task force continue their onslaught against the terrorist group. Bring us up to speed with the current situation, please.
Well, Nigeria has continued to justify its election postponement on the back of insurgency, latest efforts being the acquisition of 4 Navy ships as part of plans to improve the capacity of the armed forces to fight insecurity. Now, over the last few days, there have been intensified assault by the army on the insurgents, leading to heavy casualties. The army has also dislodged the insurgents from a few towns they captured, particularly Baga, which Boko Haram recaptured about a month ago. Interestingly, and I think it's a great kind of interesting, the economic community of Central African states has now offered to collaborate with the economic community of West African states to fight Boko Haram.
Well, the latest incidents have shifted focus onto the regional bloc, Ecowas, or Economic Community of West African States. Still are more interested in how the 15-nation bloc is doing in its quest to facilitate regional integration. Apparently, it's not doing too badly in its bid to raise $21 billion for strategic interventions.
Now, after the common external tariff, ECOWAS's latest integration plans have moved through Boko Haram to the latest ECOWAS Community Development Program, which is planning to mobilize about $21 billion to finance over 200 projects that cut across sectors of the economies in the West African sub-region. The projects are set to be part of a long-term development strategy to be implemented over a 5-year period. Now, it will benefit sectors such as transport, infrastructure, energy, agriculture, health, education, development, and capacity building. At present, ECOWAS Community Development Program has $7 billion and needs the $21 billion to enable, and needs rather about $11 billion to enable them to holistically implement the 5-year development plan. For now, it is still unclear where they are looking to for the remainder of the funds, but they are confident implementing the projects would enhance the sub-region's overall economic development.
Then there's news the Bank of Ghana has instituted financial measures to compel government to spend within its budget as part of the plans to ensure the IMF deal works. We know Ghana has been looking forward to this bailout. What's this new talk about the IMF deal being counterproductive to Ghana's economy?
Yes, Victor, the Bank of Ghana Governor, Dr. Henry Wapa, says financial measures have been instituted by the bank to ensure that Ghana does not exceed 5% of last year's revenue. He says the measures, which are expected to be captured in the IMF conditionalities for the bailout, which Ghana has been seeking, would raise investors' confidence and contain the pressures in the forex market. Now, while Ghana appears to be all out to ensure the bailout works out in March or April, a former Deputy Finance Minister Minister Professor George Gianbafa is opposed to that idea. He says getting help from IMF would be counterproductive, as the IMF would have to dictate how Ghana runs its economy. The alternative would be now for Ghana to focus on homegrown measures in dealing with the economic challenges. The IMF is in Ghana currently up until Thursday to structure a 3-year program meant to rescue Ghana's economy. So as far as we know now, Ghana is still bent on taking that bailout come March or April.
They don't have much of a choice, methinks, but that leads us to this week's trivia to test your knowledge of Africa. And we also put Christy Cole and Bonnie on the spot to pick their favorite stocks of the week. Stay with Africa Business News. If I have $10,000 to invest in the stock market, which share in your region will you advise me to buy and why? Let's go with you, Christy Cole.
The financial services sector is one of the major indicators that have been pulling up the Nigerian Stock Exchange over the last 6 days. So I am particularly interested in UBA, as we expect them to release results come 2 weeks. It is expected they will sustain 2013 growth as well as pay a dividend of maybe 40 or 50 kobo, while also achieving a yield of 11%, all of which are definitely attractive to the investor.
It's a big bank formerly run by Tony Elumelu of As Holdings and the Tony Elumelu Foundation. How about you, Bonnie Tunya?
Well, look, Victor, with that kind of money, the best stock to put it on would be Safaricom for the Kenyan situation at the moment. I mean, they've hit a record high of 1550. We haven't seen that sort of price, share price for Safaricom. They posted very impressive full-year results last year. They have quite solid management team expanding into the region. They are actually the market dominant. So you don't want to be left by the bus in regards to investing in this particular stock. So my bet will be on Safaricom this time.
UBA and Safaricom, that's financial sector and telecoms, mobile telecommunications. In our trivia this week, though, February 24th is the birthday of one of Africa's most eminent minds, a scholar, opinion maker, writer, and all-round celebrity, if you ask me, who was a lecturer at Makerere University at one point until being exiled by Idi Amin. Which African icon was born on this day, February 24th in 1933? Bonnie or Christy Cole?
For a moment, it sounded like Mwai Kibaki.
I would not put him in that category. He's a great statesman, I'm sure, but no, we're not talking Mwai Kibaki, I'm afraid. We're talking Professor Ali Mazrui, a Kenyan scholar and writer. He was born in Mombasa, Kenya on February 24th in 1933. The celebrated giant is a graduate of Manchester, Oxford and Columbia Universities. He was Dean of Social Sciences at Makerere University in Kampala until 1973. He lectured everywhere, including Kenya, Nigeria, and the US. He also served as advisor to the World Bank at one point, among other responsibilities. In 2005, he was named among top 100 intellectuals by UK's Prospect magazine and US Foreign Policy. Professor Mazrui passed on in New York on October 12th, 2014 and was buried in Mombasa, Kenya. We're back with you next week with more Africa Business News. We thank Christy Cole Popol out of Lagos, Bonnie Tunya in Nairobi, and earlier on Christy Munda here in Johannesburg. Stay tuned to CNBC Africa. Until next week, kwaherini.